So hi, welcome to the Paycheck Protection 2 and More webinar. My name is Amanda Gerke. I'm with the City of Alameda's Community Development Division. I'm going to talk about, I'm going to do introductions in a minute, but first just wanted to give a few technical notes. So we have all our attendees on mute right now to make sure the speakers can be heard, but you are welcome to communicate with staff using the chat function. We prefer to use the chat function just for kind of sort of technical questions like I can't hear or something like that. For your questions and answers, we'd like you to submit them through the Q&A function at the bottom of the screen. So we'll take questions throughout the presentations, and then there'll be a lengthy period of Q&A at the end of the presentation. We also are going to be recording this presentation. We will post it on our website and send it out to everyone who signed up for this webinar in the next couple of days. And then finally, this webinar is brought to you by a partnership between the City of Alameda and the Alameda Chamber of Commerce. So I'd just like to take a quick minute to introduce and thank Madeline Sadek, the CEO and Executive Director of the President and CEO of the Alameda Chamber of Commerce. And we also have Lois Butler on the phone here, who's with the Community Development Department at the City of Alameda, our Economic Development Manager. So with that, I'd like to introduce our presenters today. We're going to start off by hearing from Marlo Schindler with the Small Business Administration. And then we're going to hear from Neil Rubenstein with East Bay SCORE. And then finally, we're going to move into a Q&A period. So with that, I'm going to go ahead and turn it over to Marlo to begin the presentation.
Great. Let me just get up my slides again. Here we go. So good morning, everyone. My name is Marlo Schindler. I am the lead lender relations specialist for the San Francisco District Office of the SBA. We cover the Northern California coastal counties, all of the Bay Area. There are 6 different district offices in California. I'm guessing all of you are calling in from the East Bay today, but if there's anyone from other parts of California, you might have a different office closer to you. So I will be talking today about the Paycheck Protection Program relaunch. So, you know, some fine print. This is the official presentation deck as of right now, but things do change. We are getting new procedural notices, not quite daily, but almost daily. We've had 2 interim final rules published. That's what the IFR stands for there in the fine print. There's the act, the language in the act itself, which in some cases hasn't been turned into policies and procedures yet. So, you know, nothing in this presentation would supersede the official language in the act or any of the IFRs or the preceding acts like the CARES Act. But I will also say, just, I don't think this is on the bottom of each page, but sba.gov/PPP has the most up-to-date information. So, you know, I can share this with Amanda and Madeline afterwards as a presentation, but I would say even if you do get a copy of this afterwards, to only hold on to it for about a week, because it will be very quickly outdated, and it's better if you refer to the website rather than to like one static document. So this is just a little bit of an agenda of my portion of the presentation. Move this around so I can read. Some of this is already slightly outdated because basically there was some concern that the first round of PPP didn't get to the hardest hit small businesses, so women-owned, minority-owned, veteran-owned businesses. So in this first kind of wave of this round of PPP opening up, last week it was only open to a handful of lenders, which are our community financial institutions, CFIs, And they were chosen to be the first lenders to gain access to the PPP portal because historically they have been the lenders who have a better track record of lending to those hard hit small businesses. But as of today, as of Tuesday, all lenders are able to participate again. So the largest banks, the credit unions, the non-bank lenders, everyone has access to the PPP portal. And a lot of them were accepting applications even when they couldn't submit them through the portal. So, but that is something that we did to try and make sure that in the first round of PPP, the money went really quickly, and so we wanted to make sure that there was some preferential access for those smaller lending institutions. And I think you'll probably see some more of that happen between now and March 31st when this program sunsets. We also have a tool, Lender Match. If you go to the sba.gov webpage, you'll be given the opportunity to look through Lender Match to find a lender. Basically, you answer a couple of quick questions about your business, how long you've been in business, kind of a range of revenue, your zip code, and the program will match you with potential PPP lenders. So normally it matches you with the traditional 7A Community Advantage micro lenders, but for this time, while PPP is top of mind, Lender Match has been retooled to just be for PPP lenders. And yeah, as we're doing right now, those of us in the SBA field offices will continue to reach out to local cities, chambers, any other kind of economic development events to try and get the word out to make sure that women-owned, minority-owned, and veteran-owned businesses know that this is available again. So here's kind of that timeline that I talked about. So last week, PPP opened for first draw PPP loan applications from only CFIs. Then later in the week, it opened for second draw, and we'll kind of get into what these terms first draw and second draw mean. What is a CFI? CFI is not actually a term that SBA has commonly used before this. This was something that was a blanket term for different kinds of institutions that we have participated in the program as lenders that are like mission-based nonprofit lenders, so not banks, but community development financial institutions, minority depository institutions, CDCs or certified development companies, and microloan intermediaries. So that was the CFIs. Again, it's a little less relevant now because we've already gotten, in this, checking what day it is January 19th. So the PPP has opened for first and second draw applications to all other participating lending institutions. So this might have been a little bit more relevant last week. And I mentioned already the March 31st deadline. So all PPP applications must be submitted by March 31st. And that must be submitted by the lenders to SBA. So if you are a business owner and for some reason you're thinking about doing it in the 11th hour, if you were to try and start the process on March 31st, you probably wouldn't get a loan. You want to think of your personal deadline as being maybe mid-March because you want to have enough time to work with a bank or credit union, a fintech, whoever it might be, to get your application complete so that they can turn around and submit it to SBA. So March 31st is the deadline, but that is the deadline for the lenders to have that completed application into SBA. So what is a first draw PPP loan? It is for eligible applicants that did not receive a PPP loan prior to August 9th, 2020. So, and that's when the first round of PPP sunsetted August 8th of 2020. So if you received a PPP loan already, you would be ineligible for a first draw PPP loan this time, but you would be eligible for a second draw, which we'll get into on a following slide. So PPP loan eligibility now includes additional types of entities. It has expanded the eligible expenses. So it was just payroll costs, mortgage interest, rent, but now things like buying PPE for your business or having to make other modifications to your business to accommodate the different ways your business has to perform because of the pandemic. Now that is covered as well as those other original costs. It is still a 60-40 split. So the majority of the PPP loan money still does have to go to payroll costs. So, and it's just kind of important to remember that the mission of this program originally and the ongoing mission of PPP is to help business owners to keep employees on staff or quickly bring them back if they've had to let them go or furlough them. So that's why 60% of a PPP continues to need to go towards payroll costs. A nice thing that has been changed as well in the Economic Aid Act is borrowers can now select a covered period to use PPP loan proceeds anytime between 8 and 24 weeks after disbursement. So if you got a PPP loan before, you might be familiar with the fact that it was 8 or 24, which was a little awkward when people were filling out the PPP forgiveness applications because they may have needed 12 weeks to use the funds, but then they were having to commit to a 24-week covered period. So this now the covered period can line up with the actual amount of time, as long as it's between 8 and 24 weeks, that a business uses to use their funds. There have been some changes so that certain borrowers may request an increase to their original PPP loan amount. That is a very small subset of borrowers. It's mainly seasonal businesses and farms and ranches. And those were businesses that may have received a PPP early in the process, but then the rules got changed and they weren't allowed to take advantage of what might have been a more favorable set of terms that would have allowed them to borrow more money. So it's just trying to kind of make things right for those borrowers who did get the PPP, but didn't get to take advantage of the full amount they might have been eligible for. So it's a small group, but for those that it's relevant to, there is a procedural notice out that outlines kind of who's eligible and how they would work with their lender to get that extra additional money. And then they would still be eligible for a second draw. Yeah, it must apply on or before March 31st. Already covered that. So there, in the previous slide, there was a mention that there are new entities that are eligible that weren't eligible for PPP in the first round. So newly added to the list are housing cooperatives, destination marketing organizations, certain 501(c) organizations such as chambers of commerce, and eligible news organizations. 501(c)(4)s, I've gotten the question already, or have not been added. Still eligible, so eligible last time, eligible this time, are business entities, and we're agnostic on what type of legal designation you have. So partnerships, corporations, LLCs, sole proprietors, independent contractors, self-employed individuals, all still eligible. 501(c)(3) nonprofit organizations, 501(c)(19) veterans organizations, and tribal businesses continue to be eligible. Okay, so that was a first draw loan. What is a second draw loan? And so this loan is still a PPP for borrowers that previously received a PPP loan. But again, here's where you're going to start to see changes in the eligibility. So have 300 employees or less and suffered a 25% reduction in gross receipts. So with the original, with first draw PPP, it's 500 employees or less. With second draw, that number has come down. And then there's the addition of this requirement that there be a 25% reduction in gross receipts. For most borrowers, the maximum loan amount of a second draw PPP loan is 2.5 times the average monthly 2019 or 2020 payroll costs up to $2 million. And again, that maximum amount for a second draw PPP loan is down from first draw. First draw, you can go up to 10 million. Second draw, capped at 2 million. For borrowers in the accommodation and food service sectors, and that is the businesses that start with NAICS code 72, the maximum loan amount for a second draw PPP loan is 3.5 times the average monthly 2019 or 2020 payroll costs up to $2 million. I did a similar presentation recently for the Walnut Creek Chamber, and I got the question, why is SBA showing preferential treatment for those particular NAICS codes? And I went back and took a look, and it is in the original bill. So this wasn't an SBA decision. This is something that's coming directly from Congress. That was language included in the Economic Aid Act. So I think many people are happy if they are eligible for that larger multiplier and have that NAICS code 72 designation. But I do understand that there are plenty of other businesses and industries that were really hard hit that would like to take advantage of that, but don't have that available to them. So again, I'll just say it wasn't an SBA decision. It was a congressional decision. So if you're applying for a second draw loan, there is a separate application from the first draw loan, because we do need to gather different information from you because of some of these changes between first and second draw. So a new form was released on sba.gov/PPP. That is SBA Form 2483 SD, the SD standing for second draw. And like with last time, for those of you who've already been through PPP applications once, there is the official SBA form, but then there's also an allowance that a lender can use their own proprietary form. So I would, if you're thinking of applying for second draw, definitely go to sba.gov and check out SBA Form 2483 SD. But when you're actually working with your lender, they might not want to accept that form. They might have their own bank form that they've developed, or more likely, especially with the larger lenders, they probably have an online portal that is asking for the same information that would be gathered by that form, but they were going to want you to input it directly, so they just have it right in their system. So, but their system will ask for the same information on the form. So if you're in the process of trying to gather your documents before logging into their portal, that's the best tool to use. So you cannot receive a second draw PPP loan unless you already received a first draw PPP loan. So they're not, independent, they're sequential. You also have to have, you have to have used, or you will use, the first draw PPP loan amount only for eligible expenses before the PPP second draw loan is dispersed. So there's a couple things there. I think some people, and I don't know if they got this from the news or just their own supposition, believed that they would have to have had the first draw PPP loan forgiven. That is not the case. It is that the requirement is that you have to have used or will use the first draw PPP loan amount before the second draw loan is dispersed. At this point, pretty much everyone, I think, should have, even if they got their loan on August 8th and used the 24-week period, like most people who got the first round, this shouldn't be an issue for them. But we do have like a lot of borrowers who maybe are working with lenders who aren't accepting PPP forgiveness applications still yet, and they would like to apply for the second draw. Again, as long as they have used the money and used it for eligible expenses, then they can apply for the second. Has no more than 300 employees. Again, as I mentioned before, that's a different criteria from the original PPP loan where it's 500 employees, and then can demonstrate at least a 25% reduction in gross receipts between comparable quarters in 2019 and 2020. Probably unsurprisingly, this is the point on the second draw PPP loans where I've gotten the most questions from individual business owners. And this is where it's great that we have SCORE with us, where we have Neil, and where you also have access to your small business development center counselors, because they can go through the process with you of trying to determine whether or not you meet this eligibility criteria. We at the San Francisco District Office of the SBA aren't going to be able to give you an eligibility determination and say, take a look at your financials and determine that you meet this. But if you do have questions because it doesn't seem straightforward, I would refer you to the interim final rule on second draw loans. It is written more for a lender than for a borrower, but everything that we have on sba.gov is public facing. So you have, as a business owner, as a potential borrower, you have access to the exact same information that the lenders do. We recently updated the format of the website. So it used to be that all PPP stuff was just in one place together at sba.gov/PPP. Now, if you go there, there's like 5 or 6 different options. So if you want like the meatiest, hardest to read financial regulation, federal regulations, go to the for lender section, and you can still find access to those interim final rules and procedural notices. But if you want the more public facing information, you can just go to click on the first draw or second draw links, and that'll get you the stuff that is more, a little easier to understand, but is a little lighter on details. PPP loan forgiveness. I'm going to take one quick break because I'm getting a little hoarse. So the forgiveness process, like all aspects of the PPP loan, it happens through your lender. So there's no direct application where you would submit your forgiveness application for PPP directly to SBA. No, everything goes to your lender. Your lender's the one that submits it to the SBA portal. There have been updates to this process with the most recent Economic Aid Act. So talking about this one recently, this is a huge one for a lot of borrowers who receive both an EIDL advance and PPP. So EIDL advances are no longer deducted from forgiveness payments. So if you were in the forgiveness application process when the Economic Aid Act passed, then great. So if you were eligible for full PPP forgiveness and you had an EIDL advance, it doesn't matter. You still got the full PPP forgiveness. However, if you had gone through that forgiveness process before the Economic Aid Act passed, then you received some letter, some email from your lender that even though you did everything correctly and your PPP forgiveness amount should have been fully forgiven, you still had between $1,000 and $10,000, depending on how much you got for your EIDL advance, that was being termed out over the 2 to 5 year term into a loan. So so basically that part that got termed out into a loan, SBA will be remitting payments to the lender. So you don't have to do anything. This is happening automatically. So you don't have to go to your lender and say, oh, this thing happened. When can I get my money? It's coming soon. It hasn't happened yet. SBA is in the process of determining how much we need to remit to each of the lenders. But there's nothing you need to do if you kind of fall into that category of folks who unfortunately had your EIDL advance amount deducted from your PPP forgiveness. Also included in the Economic Aid Act, forgiven PPP loans are not taxable income. Expenses paid with PPP loan funds are now tax deductible. And that's as much as I'll say on this topic. I think Neil might be addressing this a little bit more, but in general, when people do have questions about taxable income as it relates to programs set in place either by the CARES Act or amended by the Economic Aid Act, we do refer people back to the IRS. They put out a procedural notice about the CARES Act already. I assume there will be one forthcoming about the Economic Aid Act and the changes that have been made. But it's good news. It's just another one of these places where we're still waiting for it to be fleshed out a little bit more. And as I mentioned earlier, there are expanded forgivable expenses are permissible for any PPP loan not already forgiven. So, pretty much everything in the Economic Aid Act could be put in the category of good news. So another thing that is coming soon is the simplified forgiveness application for PPP loans $150,000 and under. So I would ask that if you are a borrower who received a loan of under $150,000, if you want to go ahead with the process, you can still go ahead and submit it to your lender. But what we're hearing is a lot of lenders have either stopped accepting forgiveness applications for loans under 150 or are really strongly advising that borrowers hold on because it is supposed to be even further streamlined than the EZ or the S versions that are out there. But I will point out, this is not blanket forgiveness. That was something that was floated, showed up in the news a bunch, and some people I think still believe that that is what passed, that just all loans under 150 are automatically being forgiven. That is not what this is. It will still be an application. It will still need to be submitted by you to your lender, but it will be a one-page document and will require a lot less and possibly no supporting documentation. This is where like the details are still being worked out. But if you can wait and you are eligible to use this new process, it's probably a good idea to go ahead and wait. But again, not blanket forgiveness. You still do have to apply for it. So what to do now? You can contact your lender. We are working on getting together a list. So there's something kind of happening with the lenders this time that happened with the lenders last time. There is certain lenders are prioritizing their existing relationships. So in some cases, that's just all existing business bank customers. In some cases, that's specifically the folks who already received a PPP first draw loan, and they're going back to them to either get them the increased dollar amount or on the first draw or to help them apply for a second draw. And some lenders are, you know, wide open to all new customers. So in general, it is a good idea to start with your primary banking relationship because that lender is the one that's most likely to be open to giving you a PPP loan. But if they're not, if they're in one of the categories of lenders who's being a little bit more restricted with who they're lending to, then you can go to lender match as one way of finding other lenders that are participating. And then there's also the fintechs. So there was a lot of lending happened in the first round of PPP, and I assume will happen in this round as well, not through the banks and credit unions, but through the new fintechs that are participating. Mentioned it a bunch of times, but bears repeating. For the most up-to-date documents, please do go to sba.gov/PPP. As soon as something new comes out, it goes up on our website, and then it also goes up on the Treasury website. So the other option is treasury.gov/cares. We're posting the same information, but with like a slightly different format. So you might like how Treasury is doing it better, but it's going to be the exact same information. Our local office is sba.gov/ca/sf. That, you know, when things happened in person, that's where we used to list our in-person classes. Right now, since everything's virtual with both us and with our resource partners like SCORE, SBDC, and the Women's Business Centers, what you'll find there is upcoming webinars. If you want to get the most up-to-date information, I would suggest signing up for the newsletter. So you can go to sba.gov/updates. You have a couple different options of ways to sign up. You can sign up for the national newsletter. You can also sign up for our local San Francisco district office newsletter. We're both kind of putting out as soon as stuff comes up. You can follow the national SBA Twitter account at sba.gov. And if you want to reach out to us directly, it's the phone number 415-744-6820. That is actually our front desk number. No one is currently in the office, but once you leave a voicemail, it gets forwarded to our team. We're trying to reply within 24-48 hours, unless of course there's a long weekend. But on work days, we're trying to respond quickly. SFO mail at sba.gov similarly is being responded to by our full team in San Francisco. I'll also put out that my email address is just my name, marlo.schindler@sba.gov. If you have specific questions about PPP, happy to address them. But as an individual, I do occasionally take various forms of leave, so sending something to the team email box ensures that you'll definitely get eyes on it. Whereas mine's more just me, just one person. I will, before we get to questions, just address two other programs that were in the Economic Aid Act, but that I don't have slides for because I am low on details. And those are the Shuttered Venue Operator Grant. We did a event last week that is now available on YouTube. If you go to sba.gov/coronavirus, the Shuttered Venue Operator Grant, or SVOG, information is there, including a link to the YouTube video. So that was originally called the Save Our Stages Act, but I guess there was more in the Save Our Stages Act that didn't make it into the Economic Aid Act, which is why they changed the name, because it's not exactly the same as Save Our Stages. But yeah, if there's anyone on the call who is a theater, venue, museum operator that thinks they might be interested in that grant, just know that we don't have the full information, that the application is not yet available. But if you do go to that sba.gov/coronavirus and check out the information, there are some suggestions on what documents you would need to gather to prepare yourself to apply for that grant later. And I will say that in this case, for the most part, you can take advantage of all of our programs. That they're not, they don't cancel each other out. But if you think that you're going to be applying for an SVOG grant, you cannot also have received PPP. So it's one or the other in that case. The other thing that is coming back, but we don't have details on yet, is the EIDL grant, which was under the CARES Act called EIDL Advance, and we were specifically told not to call it a grant, but it was a grant. And now I think just to clear that up, we're just going ahead and calling it the EIDL grant this time. So that's in the first round up to $10,000. I believe in this next round, it's just going to be straight $10,000, not up to $10,000, but that still remains to be seen as our Office of Disaster Assistance works out the details on how people will be able to apply for that EIDL grant. The EIDL loan, the up to $150,000 loan through the Office of Disaster Assistance, originally that was intended to, or it did sunset on December 31st of 2020. So that was when the National Disaster Declaration ended for the pandemic, but obviously the pandemic hasn't ended. So the new deadline by which people need to apply for an EIDL loan is now the end of this year. So December 31st of 2021. So if you have not applied for an EIDL loan yet, but you'd like to do that, the portal is open. For COVID EIDL, it's still the streamlined application, slightly different from the regular EIDL or economic injury disaster loan if you had reason to apply for that due to any kind of physical disaster in the past. So EIDL loan currently open, PPP currently open, but the Shuttered Venue and EIDL grant, we're still waiting for more details. And I think I'll call Amanda back to maybe transition to Neil before we go to questions, or do you want to go right to questions? How do you want to?
We should transition to Neil and then take all the questions together as a group.
Okay, sounds great.
All right.
I will stop sharing.
Okay, and then I'm going to help out with Neil's slides. So I'm going to pull those up here. All right. So Neil, does this look right?
It does. Thank you.
Yeah.
Okay. Anyway, my name is Neil Rubenstein. I'm with the East Bay chapter of SCORE. SCORE is a resource partner with the U.S. Small Business Administration. We're a private 501c3 nonprofit organization, so we're not actually part of the SBA, but we do get some some funding, not enough, but we get some funding from Congress that's administered by the SBA. And we work with the SBA on a variety of things, including kind of technical assistance for businesses dealing with these various environmental stimulus packages. What we are is SCORE is a national organization with chapters around the United States. East Bay SCORE is based in the East Bay, obviously Alameda, Contra Costa, and Solano counties. We have in the East Bay 50 counselors who are people who are either retired or actually still working, that are either owners, managers, or service providers to businesses. We do this as volunteers. We can provide one-on-one counseling in all aspects of businesses, including help in applying for these economic assistance programs. We don't fill out the forms for you, but we can give you information and kind of oftentimes help clarify some issues. Currently, because of the COVID-19, we're not meeting face-to-face, but we do the counseling by video, phone, or email, depending on what works for the clients. We also put on some low-cost webinars. Our office is at the College of Alameda. Right now, we're not seeing anybody in the office because of the COVID-19, but you can reach us by phone, by email, or look at our website, which are on the screen in front of you. We have on the website profiles of 35 to 40 of our counselors. So you can get an idea of who we are. You can ask for somebody by name if you choose to do that. I have a question I want to ask Marlo about the PPP program, but I'm going to wait until I'm done with this and we do with the questions. It's a question that has come up with a number of our clients. And one thing Marlo has been good about, and the SBA generally has been good about, is sometimes if we as counselors are seeing the same questions raised over and over again, sometimes we can ask Marlo and get the answer, or if there is no answer, at least know that, but so that we're better able to provide counseling to our to the small businesses that we see. Could you go to the next slide, Amanda, please? One of the things that the new law did, aside from what Marlo was talking about, was it expanded some of the programs that were established under the CARES Act, in the sense of expanding them, not necessarily making them bigger, but they had expired and they were extended for that purpose. One of them that they did this for was the SBA Loan Debt Relief Program. Under the CARES Act, let me back up. The SBA makes a variety, or guarantees a variety, of loans to small businesses. There are, among the ones that we're talking about here, there's a so-called 7A loan, which is kind of the most commonly used SBA program. That's one which you go to a bank, you get a business loan from the bank, and the SBA provides a guarantee. Another loan that's covered by this is a 504 loan, which is typically used when you're buying real estate or heavy equipment. It's more kind of a capital expense kind of loan. Again, the loan is made by a bank or some other lender, and then the SBA provides a guarantee. And then there are microloans, which are smaller loans as well, in which the SBA provides guarantees to the lenders. And so what the SBA did, in accordance with the provisions of the CARES Act, is for people who were eligible under the terms of the loan, the SBA would actually pay 6 months of principal, interest, and fees for the covered loans. So in other words, if you had one of those loans, it again was made by a lender with the SBA being a guarantor. And so as of March 2020, when the CARES Act was enacted, if you had a loan that was outstanding and you had monthly payments of $2,500 a month, whatever it happens to be, is the SBA would simply make that payment to the lender for 6 months. and you didn't have to pay it back. It was just, the loan was paid down during that period of time. And the CARES Act covered loans of this type that were made through September 27th of 2020. Again, you had to be eligible for, there were various requirements, but that was kind of the cutoff date as to when you had that. And so if you had a loan that you got after that, you were not covered by this program. And the maximum amount of payments that you could get from the SBA was 6 months worth. What the new law did was for loan, and taking the literal wording of the loan of the law as I read it, is that it only applied to loans that were made before the CARES Act was passed. The SBA is in the process of preparing regulations and rules for this loan debt relief program under the new law. And so I'm giving a little bit of my guesstimates as to what it means. But like what Marla was saying with a couple of the other provisions, there are going to be some rules that are going to come out. And at the end of the day, it's what the SBA says says the law means, as opposed to what I say so in this presentation. So I'm kind of giving you a preview of potential coming attractions, but ultimately what you're going to do is you're going to look at what the SBA says, and the information is supposed to be put up on their website, and I'm sure it will be when it's ready. But some kind of provisions that may be applicable to some of you is for these same types of loans, the 7A, the 504, the micro loans. If you fall within one of the eligible categories, the SBA will make 3 additional monthly payments, principal, interest, and fees, beginning with the payments due in February 2021. So let's say you had a loan that had a maturity of 2 years. And so the SBA has, under the CARES Act, paid 6 months of that. Now, under this extension that we're talking about, they would pay 3 more months. And again, starting with the February 2021 payment. Also, for certain loans that are made to certain underserved or hardest hit borrowers, they will pay an additional 5 months on top of that. So that actually, if you're one of the borrowers that falls in that category, the new law would provide for 8 months of payments made by the SBA. And the types of loans that this 5-month extension applies to are basically borrowers who got SBA microloans or 7A community advantage loans. And those are loans that are primarily targeted towards the borrowers, like the microloans are $50,000 maximum. The community advantage loans are 7A loans, but they're targeted towards people living in low to moderate income areas. So again, the idea here is for this additional 5 months, it's not targeting all small businesses. It's targeting kind of the brand new startup or the businesses that are typically not as that cannot get as much credit as other businesses. Another category that's covered by this 5-month extension, separate and apart from this, is businesses that fall within certain industries that have been hardest hit by the pandemic, including the food service and accommodation industry, arts, entertainment, and recreation, laundry and personal care services, certain types of industries. Again, you have to meet all the eligibility requirements. But again, the idea that Congress had here was that certain types of industries are harder hit and are more deserving of help, or more needful of help, I guess maybe the best word for it, than industries generally. So again, the specifics will be in the SBA regulations, but that's the concept behind this. Also, what they did under the new law was that for loans that meet the eligibility requirements, and this is separate and apart from the the 3-month and 5-month extensions that I was just talking about, that if you originally could get the 6-month principal, interest, and fees, but you didn't apply for it, basically you have a new loan, you might be able to get the 6 months principal paid for loans approved between February 1st, 2021 and September 30th, 2021. And the idea here is the prior things that I was talking about were for loans that had previously been made. This provision is dealing with new loans that fall in these categories of 7A, 504, or microloan. And now you're going to be eligible for the, the 6 months payments as long as you meet the various requirements. In all cases under the new program, the maximum amount that you can get, the SBA will pay per month is $9,000. So for most small businesses, that's not going to be an issue because you're not taking out a loan that is higher than that. But there were some concerns that sometimes big businesses were getting the benefit of this. So the monthly payments at the SBA will be limited to $9,000. So anyway, so this is a potential benefit for for a lot of small businesses because it basically relieves some of your debt burden for existing loans that you have. Why don't we go on to the next slide, if you would, Amanda? Thank you. A lot of you are probably familiar with the Pandemic Unemployment Assistance Program that was created under the CARES Act. That was basically people who had been employed and lost their jobs because of COVID-19 could get unemployment insurance, assuming they met that requirement. But a lot of people, businesses that were basically operating as, somebody who owned their own business, they were a sole proprietor or an independent contractor, they were not eligible for unemployment compensation. And so if their business was shuttered or the business dropped off dramatically because of the COVID-19, they could not get any relief through the ordinary unemployment programs. The Pandemic Assistance Program was designed by Congress to basically provide assistance to small business owners in that situation. As with unemployment insurance, it's administered by the states. So in California, it's administered by the state Employment Development Department, but it's funded by the federal government. Anyway, under the CARES Act, the Pandemic Unemployment Assistance was authorized only through December 31st, 2020. And what happened under the new law is the program was extended for 11 additional weeks. And if you're applying new, your deadline, it was good through March 14th of 2021. If you are continuing to receive PUA benefits on March 14th, you could get them. It was extended under the new law to April 5th, 2021. So again, it's not really changing the law of what you had under the CARES Act in any significant respect. It was just intended just to expand the time period within which you could get it. Also, as you probably may remember, when the CARES Act was adopted in March of last year, there was a federal supplement of $600 per week of additional benefits that you could get. In other words, there was under the formula based on your prior income and so forth, you would be eligible for a certain amount of money. And the CARES Act basically provided a $600 bump on top of that. And that expired in July. So since the end of July, somebody who's been getting pandemic unemployment assistance would not, they'd be getting some amount, obviously, based on their prior earnings, but would not be getting this $600 supplement. Under the new law, Congress reinstated that supplement, but it was in the amount of $300 per week rather than $600 as had been before. And again, that also runs through March or April, depending on your situation. As with everything else, this is all subject to the rules and regulations. The U.S. Department of Labor is coming up with some rules, which have not, as I understand, yet been published, as to how the state is supposed to administer this. So it's going to be administered through the state of California if you're here in California. But if you look at their website, they're telling you that they're waiting for the U.S. Department of Labor rules before they can actually go forward with it. One of the things they do say on their website is that if you're getting pandemic unemployment assistance, and you're covered, you don't have to apply again for it. They will automatically determine what your benefits are, and you will get them. The same process you have to certify every 2 weeks, I think it is, will continue. So I mean, you still have to do that, but if you're getting them now, you're not going to have to apply all over again for new pandemic unemployment assistance. Again, I'm repeating myself, all of this is subject to the new rules and regulations. So what I'm telling you now is my best guess about this, but the EDD has this stuff on its website, and they're providing more information about this, when they get that. So anyway, there's a couple of other things in the CARES Act that were continued by Congress, some relating to tax issues. Again, we're waiting for the regulations to come out. But basically what Congress was doing under this new law, to a large extent, was kind of continuing the existing programs for a few months. They were not able to come to an agreement on what are we going to do for the next year, but they were faced with the deadline with everything was going to end at the end of December. So a lot of what was happening in the new law was they pushed things out for a couple months, made some changes in it, but kind of with the idea that Congress is going to figure out, hopefully, what to do on a longer term basis, a little bit later in this year. So anyway, so those are a couple of things. One of the things I promised Marlo that I was going to ask you a question about PPP. And I'll be happy to answer questions about these things when we open this up to everybody else. One of the things we found at SCORE was that when the CARES Act was passed, a lot of people applied for PPP loans before it was really clear what the rules were going to be for PPP loans, because get your application in and that type of thing, and you don't have to accept it and so forth. And what happened, we found, was that some businesses, when they actually were given the PPP loans, and by the time they were given, there were some rules and regulations that had come out. They said, oh my goodness, I can't do that. I can't comply with that. I can't meet this thing. I can't meet that thing. And they gave the money back, or they repaid it. Yeah. And they paid, a couple of weeks worth of interest. And so it wasn't forgiven. They didn't spend the money, or if they did spend the money, they only spent a small part of it. They just realized, well, this was not going to work for them. And so are they eligible to apply for a second PPP loan now, in the sense of they didn't use the money for employees or expenses. They just determined they couldn't use it and they gave it back. Are they eligible to apply again?
I got this question on the Walnut Creek Chamber question too, and I took a quick look at the second draw IFR, and what it says is that basically the first draw needs to have been used for eligible uses. And so there isn't anything specifically about kind of that case where someone gave it back. Based just on that one sentence that's in the IFR, I would say they're probably not eligible because they didn't use the funds for, payroll, rent, mortgage interest, which is what the PPP was intended for. But I feel like because you've asked it, because it came up on the last one, because I think people are asking it, it might be one of those things where we get a clarifying procedural notice later So, I mean, that's just going to be dependent on enough lenders asking our Office of Capital Assistance about the situation and about specific situations rather than theoretical situations. And that, yeah, there was kind of a weird period at the beginning there where some people were able to kind of give their money back or decide they didn't want it immediately and the loan was canceled. And then there are some that held on to it for a couple of weeks and then repaid it with a little bit of interest. And those folks might also be in different categories. The folks who managed to who got it immediately said no and got the loan canceled are different than folks who repaid it without using it for the eligible uses. So in answer to somebody else's question in the Q&A, I already put the link to the interim final rule on second draw. That is right now 100% of what we know about second draw, and it doesn't expressly address that situation. But from what's in there, I would say that person would probably be ineligible.
Now, I know what happened with, and you may not know this, but I know what happened with the first things. What I think it was the Treasury Department did was they had all kinds of questions, and then they came up with was it 45 questions and answers? I don't know. And are they going to be doing that? This so this probably will be one of the questions I get. Is that?
Yeah, there's a couple things we're missing that we had in the previous round. So one thing is FAQs, and the FAQs kind of came out sporadically after the first round of PPP. So I would expect that to kind of be what will happen this time. They'll probably start a new document, and as things come out for this round, they'll put them in the FAQs. But keeping in mind, FAQs don't have the same weight as a procedural notice. You know, there's policies, there's procedures, and then the FAQs are not really anything. They're kind of like toothless guidance. So, you know, what's more helpful is when an interim final rule, an IFR, or a procedural notice comes out, because those more have the weight of the law behind them. Whereas the FAQs
what I noticed was that on a number of these, obviously you're correct. I mean, but you get the answer to the question, the FAQ, and then a couple of weeks later, you get the interim rule that implemented the answer to the question. I mean, they could do the answer to the question right away, and they had to go through a process. So
exactly, yeah, there's a whole process for the IFRs and the procedural notices, whereas because the FAQs are nothing, they're not legally binding. They can kind of be put up, but they also they don't have the same teeth.
Okay, all right, thank you.
Well, thank you both for your presentations. Those were incredibly informative. And I see we have some questions come in. And Marlo, I see that you've been answering some of these, which is fantastic. We really appreciate that. I may, if it's all right with you, I would like to go through these on the webinar, because we actually get a lot of people who watch these asynchronously. So that might be the best way to get them the information. So I'm just going to quickly go through some of these questions. And if folks think of other things while we're talking, please go ahead and enter them in the Q&A section. So the first question I'm seeing here at the top is, how can we prove the 25% loss in a quarter that is acceptable for example, is a printout from our cash register software or our report from our taxes paid to the franchise tax board?
And yeah, so as I mentioned, for all kind of these sorts of questions, I'm going to refer people to the IFR on second draw loans. I believe it's pages 6 and 7 address all the different ways that the 25% calculation can be made and documented. So it's not just like, if it was an easy answer, I would just say it, but it's multiple pages in a procedural notice. So I would rather refer you there rather than parse it and give you incorrect information.
That sounds great. And what I'm going to do is I'm going to take all these links and put them in the follow-up email that we send to folks who registered for this webinar. If you are watching this webinar and are not registered for it, please email me at Gerke, that's AGEHRKE at alamedaca.gov. Again, that's AGEHRKE at alamedaca.gov. And I will send you that information. So the next one is, what is the criteria for increase in original PPP amount?
Right, and again, so for this one, I sent a link to the procedural notice. So as I mentioned, it's a small subset of folks who already received their PPP loans. So I believe it was partnerships, seasonal businesses, farmers and ranchers. And it's those folks who got their original loan very early in the process. Then we changed the rules that would have been more advantageous for them if they had applied in basically after the PPP Flexibility Act, I believe. So June or July, if they'd applied after that, they would have gotten more money. But we didn't have a mechanism in that first round to increase PPP loan amounts. So whatever you got, and that was approved and dispersed, that was it. There was no ability to increase it or do second disbursements. So it's trying to like make that right. But again, rather than just saying like all farmers and ranchers are eligible, I would like to refer you back to the procedural notice. So if you believe yourself to be in one of those categories that didn't get the full advantage of the first round, check that out. And then if you do believe you're eligible, definitely go back to your PPP lender and have that conversation. And again, it's not automatic. So it's not like, oh, I'm eligible, therefore my lender will do it. You're still going to have to go and have that conversation with them, and they're going to have to agree that you're eligible and resubmit to SBA. So it's not, some things that happen with these acts happen automatically, but some require both borrower and lender to be in agreement.
Thank you. So the next question is asking about the one-page forgiveness application. Are there going to be changes to the 3508 EZ form already out?
Yeah, and just for my own sanity, I wish I knew what this application was going to look like. So I don't know if it's just going to be a streamlining of the 3508 EZ or the 3508S, or if they're coming up with a brand new form. I would suspect it's going to have to be a brand new form based on the language in the Economic Aid Act. But when we get to speculating, we get in trouble. So I can't say at this point if it's going to be a variation or a brand new form.
Thank you. So the next question is, would the gross receipts be included in the PPP loan first draw amount?
I didn't understand this question. So if that person wants to send a little bit more detailed question, I'll try and address it. But basically the PPP loan, the first draw, the way you apply for it hasn't changed. So we did actually just put out, and I can share the link with Amanda, or you can just go to sba.gov/PPP. But I believe it wasn't Martin Luther King, but I think it was on Sunday. We just put out a new how to calculate document for, I don't know if it was first draw or second draw. I'd have to see how to calculate. Yeah, first draw. So as of January 17th, we have a PDF that runs through, if you're a sole proprietorship, if you're a partnership, if you're an LLC, if you're, so if you have questions about how to calculate how much you might be eligible for a PPP first draw loan, there's a great new PDF out that walks you through it by entity type. Again, you have to do this in concert with your PPP lender. So, I mean, this is a good document for you to know how much you might be eligible for. But if your PPP lender does their calculations, slightly differently, or doesn't accept some of your documentation, it's not that you're automatically going to get what you calculate yourself to be eligible for, but it'll give you an idea of like ballpark what you should be eligible for, so you can go in and be informed when you're talking to your PPP lender.
Thank you.
Right now.
Question about the EIDL grant. Can we apply for the EIDL grant a second time? When does it open, and where can we apply?
So basically everything on the EIDL grant is still TBD. My understanding from the Economic Aid Act is that if you had applied for the EIDL advance, but you didn't get the full amount, you might be able to apply for a second one. But if you got the full 10,000, then you wouldn't. But it's still kind of TBD on that. And where to apply, we don't have any portal or application available yet. Where that is going to be available when it is published is with our Office of Disaster Assistance. So we have kind of our different segments within SBA, and Office of Disaster Assistance is the one who does the direct lending. So that's who does the EIDL loan. That's who also does the EIDL grant. And brand new to their repertoire is going to be the Shuttered Venue Operators Grant. That's going to be also through ODA, or the Office of Disaster Assistance. So you know, if you wanted to apply for a COVID EIDL, that page is already up. I assume when EIDL grant is available, it will be posted on the same page, but I can't say that for 100% sure. But you could just check that periodically. Or again, sba.gov/updates, sign up for our newsletter. As soon as it goes live, we'll definitely send something out to everyone on that list.
Yeah, one thing is the SBA issues press releases, and I think this is following up what Marlo was talking about, issues press releases, and what they're doing with this law, as they did with the CARES Act, is it's fine to check their website, 3 times a day, but they send out notices saying, oh yeah, these rules have come out, and then they provide the links. So I imagine, correct me if I'm wrong, but I think somebody can go on your website and sign up to get these newsletters. And once this passes and you don't want to get them anymore, you can unsubscribe, right?
Yeah. So there's both. I think you have the options to sign up for just the updates or the press releases. And yeah, it's interesting because we used to be a little tiny agency no one cared about, but now when our stuff comes out, it ends up in the New York Times and the Washington Post. So, I mean, you can also just watch the news, because these are now, these tens and hundreds of $billion programs are newsworthy. But of course, with the caveat that the news also often gets it wrong or is a little premature with some of their announcements. So while you can wait to hear it in the news, when you do, please do come back and actually look at SBA.gov website to make sure that it's correct. So another thing that happens is congressmen, congresswomen will occasionally get a little ahead of us and make announcements that haven't happened yet. So, what your congressperson is tweeting isn't necessarily like the most up-to-date information, even though they're a federal representative. So you do want to look at sba.gov or treasury.gov.
Thank you. So the next one is, with reference to the first draw, if we choose 24 weeks, when is the 24-week start date?
Yeah, so one thing that hasn't changed is how the covered period begins. And the way the covered period begins is when the PPP loan is dispersed. So you don't get to choose the start of your covered period. What you get to choose is the length of the covered period. So that's where you get to choose any time between 8 and 24 weeks, formerly 8 or 24 weeks.
So the next one is, PPP and shuttered venue grants are not compatible. Are EIDL grants compatible with either PPP or a shuttered venue grant, or both?
So you can receive PPP and EIDL. There's no conflict there, as long as the funds are being used for different things. So I mean, you just don't want to be saying that you're using them for the exact same time period or whatever. So you do want to document that you needed the funds for 2 different things. And then, right, so PPP and shuttered venue are not compatible. So if you're going to be applying for shuttered venue, you probably don't want to apply for PPP. Shuttered venue and EIDL, I believe, are at this point, they're not necessarily in conflict, but I think we would need to wait until all the shuttered venue operator grant information is available before I could definitively say that, because sometimes things that aren't in black and white in the original Act language get added when they're interpreted into policies and procedures by the SBA. So I don't want to say definitively you can have both of those, and then it turns out that that's considered double dipping. So I would just have to say, wait and see on that.
Thank you. So this is a question about what quarters are being compared for between 2019 and 2020 for the second draw.
Yeah, and again, I'll refer you back to the IFR on how you can calculate that. So I mean, the easy answer is you have some discretion as to which quarters you're comparing, but I'll refer you to the IFR for those 2 pages, I believe page 6 and 7 on how to calculate.
So I think the next question, you guys went back and forth a little bit on it, so I want to try and capture this. In the presentation, I heard that PPP borrowers must spend 60% of borrowed funds on payroll. But I believe that's not the complete answer. Borrowers can spend PPP funds on any qualified expenses in any amount they choose, but if they want to apply for 100% forgiveness, then they must have spent at least 60% on payroll. And if not, then partial forgiveness is available. Is that correct?
Yeah, and we did go a little bit back and forth. So basically, yes. So I said, you know, that you must spend 60% of PPP on payroll, and the must is in regards to getting the forgiveness. So if you receive PPP loan and then you spend it on anything besides that 60-40 split of eligible costs, it's going to impact the forgiveness. So even if you spend 50% on payroll, you're not going to be eligible for the full forgiveness because you didn't hit that 60%. You can spend more than 60% on payroll. You can spend anywhere between 60 and 100% on payroll. And I mean, if you do spend 100% on payroll costs, it's going to be easier to document because you're not going to have to deal with, you know, documenting your mortgage or your rent or your other utilities. But if you spend it on either the percentages are off or you spend it on something that's ineligible, then that portion that you spent on ineligible costs will not be forgiven. So that's where it gets termed out into the 2 or 5 year loan, depending on what you agreed with your lender. So yeah, if you don't hit that 60-40 threshold, you're not going to be eligible for full forgiveness. You're also then not going to be eligible for the second draw loan. So something to bear in mind.
All right. So here's a question for Neil. Forgiven PPP loans are not taxable income in tax return. Is it income under EDD pandemic unemployment assistance? If yes, would the income in the week of forgiven confirmation?
The short answer to that is I have no clue. It's one of those things. The rule was just changed because the IRS had taken a position on this by regulation, and Congress basically changed the rule by this recent legislation. I have no idea what the EDD is going to say on that. Hopefully at some point they will say that, but I think at the moment it's unknowable.
Yeah, and I'll just say, I mean,
on that.
We got a lot of pandemic unemployment insurance questions, and unfortunately we can't answer any of them because that's just not our program. So we do end up referring people back to EDD, and then occasionally we hear about less than great customer service from EDD. And unfortunately, regardless of that, we still aren't going to have the answers to anything related to unemployment insurance.
Yeah, the process is actually the federal agency involved with that is the U.S. Department of Labor. And they issue regulations that the state agencies in California, it's the Employment Development Department, administer. So obviously you're right. I mean, just what you're saying is the SBA is kind of out of that loop. The federal government's involved, but it's a different agency. And so, yeah, it's a good question, but
yeah,
I don't know what the answer is. And I don't think it's been resolved.
Yeah, we get a lot of questions with, you know, I'm a sole proprietor, I'm an independent contractor, can I get PPP and unemployment? And, you know, we're kind of agnostic on that. It's up to the state because, yeah, every state is doing unemployment a little bit differently. And we're a federal agency, so we're administering a national program.
One thing I would suggest is the Employment Development Department does have a website that talks about a lot of this stuff. As of this morning, the website said we're waiting to receive information about this. So, I mean, you're not going to find anything there, but they're pretty good about you know, having questions and answers and that kind of thing, you know, on their website once they have the information to put up there. They are, from a, again, as Marlo said, they have been overwhelmed by the volume of work that they have received out of this. And so trying to place a telephone call and getting an answer has been an impossibility for most people. But there is, once they have it, they put it up on their website, and so you can get a lot of questions answered that way.
Thank you, guys. John, I see a question here about payroll eligibility under PPP, but I think Marlo addressed that when she spoke previously. Is that right, Marlo?
Yeah, and it sounds like we're not unmuting people, we're just doing written. So, I mean, John, if you want to talk or email me, Marlow, marlow.schindler, schindler @sba.gov. If I haven't fully addressed your question, we can have a conversation offline. Hopefully I've answered it at this point, but if not, you know, we can go a little further into the weeds when we can actually have some back and forth.
And then the last question that I have here, so just so folks know, we're going to wrap up after we, when we don't have any more questions. So if you have any more questions, now is the time to put them in the Q&A function. So the last question we have here is, can we use the PPP loan for the payroll of new employees?
So, you know, it depends. The answer, it's not a program that was meant to help like expand your workforce. It was meant to kind of help you retain or rehire. But if you're in a position where, you know, you had 12 employees and 6 of them are on unemployment, and for now and for various reasons they don't want to come back, but if you got the PPP, you'd be able to pay the salaries for those 12 people, and you can find other people that you can hire, then you're not required to spend the money on those original 12 employees. So if you have new employees kind of in that sense, then yes, their payroll could be covered. And I mean, I guess even if you did hire some new employees, but it's kind of not the intention that this would be a loan to help you expand your workforce per se. But yeah, you could use, as long as PPP is going for payroll.
Okay.
That'd be eligible.
So we've had a couple more questions come in. One person is asking about a recording of this webinar. We are recording this webinar, and I'm going to be emailing it out to everyone who registered for it, and we're also going to put it up on the city's website. There's also a question here, second round of PPP, how many months of rent can we pay the landlord if we owe them for more than 2 months?
So I guess the answer, so that's someone who's not current on their rent payments?
That's what it sounds like.
I mean, I would say you're probably going to have difficulty getting a PPP loan if you're not current. I mean, you can use the funds over the course of a covered period. So it's not supposed to pay like anything that's like in arrears. It's supposed to be, okay, the covered period starts for these 8 to 24 weeks or anywhere in between now. You can use it for rent, the rent that occurs during that covered period. So you wouldn't be paying back rent, and you wouldn't be paying future rent. It's the kind of description of the covered period and the rent that can be paid during that it's in one of the IFRs, which I keep referring people back to, but it's also in the, if you look at the 3508, there's that, which is the PPP forgiveness application. There's a whole kind of set of supplemental instructions at the bottom that goes through what is eligible for forgiveness. So that's, instead of going to an IFR, going to the 3508, it's actually a good place to find like how you could spend PPP funds and still have them be forgiven. But yeah, it's not for the past or the future, it's for the covered period.
Okay, just to clarify something on that, Marlo, I think I get what you're saying. Is a fair number, you know, in Alameda, and I think this is true a lot of most places, you know, has eviction moratoriums. And so the way a lot of small businesses are surviving these days is not paying their rent, or not paying all of their rent. And and the landlord can't evict them because of the eviction moratorium. And with the hope that somewhere down the road, they're going to be able to work something out. I think what you're saying is that, and I don't mean to put words in your mouth. I'm just, because if I'm wrong, clarify it. Or if you don't know, that's good too. But I think the question a lot of businesses are going to have is, okay, I've done that. You know, I haven't been paying my landlord. I haven't been evicted because I can't be. I'm still in business. And so if I can get some money, and it's not like this was a lease debt that arose 3 years ago. It was 6 weeks ago, or 2 months ago. But I think what I'm hearing you saying is the lease debt had to accrue or become payable within that 8 to 24 week period.
Right.
And so as long as the payment date was within the period for the rent, you know, it was due on the 1st of January, that's fine. But if the payment date was like in October, then that's not in the covered period.
Right. Yeah. And there's two. There's the covered period and the alternative covered period, which is again why I would refer back to kind of that 3508 instructions for when it has to have been accrued versus when it can be paid and still qualify as falling within the covered period. But yeah, there's like some wiggle room, but there's definitely not like it wasn't intended for kind of the scenario you've suggested and what I think the participant was suggesting. So it's not for back rent. It's supposed to be covering something that accrued during the covered period.
So we have, this is more of a comment than a question, just noting that I wish the PPP program could be used for landlords, and it cannot. Is that correct? That's correct?
I'm trying to think where, yeah, I mean, they're not assistance checks, they're loans. So, I mean, it would go to the business owner. It wouldn't go directly to a landlord. I mean, that's just not what the program is. So I'm, you know, with all empathy for landlords who are having or struggling in this time, but that's just not what this particular program is. It's for the business that is the tenant. So once they get the loan, presumably then they would pay their rent. But, and this is again where this isn't a direct SBA loan. So this is a loan through banks and credit unions and non-bank lenders. And so, yeah, a business that is in a position where they haven't been paying rent for several months might not be an attractive borrower to them. So again, they're not compelled to lend to anyone. They don't have to give out these PPP loans. It's at their discretion, as with all of SBA's other programs, where we're the guarantor and we work through direct lenders like, you know, the big banks and credit unions. We had this problem with the first round of PPP where people thought it was more of a right that they, as a small business, should receive a PPP, whereas you know, the banks have discretion as to who they lend to.
And just to make sure my understanding was correct, a landlord couldn't apply as a business, correct?
Yeah, that's what I was trying to think, because in general, no, for most of SBA's programs. For EIDL, they can. For PPP, I believe they still can't. But again, it depends on, you know, what kind of legal entity they're set up to be, if they're providing other services besides just the renting of space. So it's not like a hard no, but yeah, it's been difficult to keep all the eligibility criteria straight for our traditional SBA programs, these new COVID relief programs, and then the Office of Disaster Assistance relief programs. So but again, because the intention of this program is payroll, you know, it's supposed to be for keeping employees on staff or hiring them back. That's kind of the intention.
That makes sense. And so so if there was a landlord who was wondering if they may be eligible, it would be best for them to talk to their lender about
Yeah.
that.
Yeah.
All right. I don't see any other, I think we got to all the questions. So I just wanted to take this opportunity to thank you both for participating in this webinar today. We really appreciate it. It's a lot of really great information. And I don't know if either of you have just any final comments before we log off.
I just continue to say, you know, sba.gov/PPP, most up-to-date information. This is being recorded, but if you're watching it, you know, past January 23rd or something, I would say make sure you're just looking for the most recent information, because unfortunately it's not static.
Yeah, and yeah, I've been really impressed with the efforts that the SBA is making to make this workable for people. It's hard, and they're doing a lot of this under very compressed time deadlines. So, and Marlo has been great. Do feel free to contact us. I gave you the contact information earlier in the presentation. It's also eastbay.score.org is our website. And if we can help you, we'd be happy to do that.
Well, thank you both. And to the folks on the webinar, I'll be sending out a bunch of links and a recording of the webinar in case you'd like to review. So thank you very much. I hope you have a great day.